Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Thursday, March 29th, 2018. I'm Frank Ochoa, aka PivotBoss. Today will be the last trading day of the week and of the month. Next week, next Monday, we will begin the new month, the new week, and the new quarter, which could be a very, very interesting week next week. And again, I will be hosting a monthly market outlook next Monday at 3:30 p.m. right after the market closes. We'll do a stock picking session. We'll also analyze futures markets and take requests. So if you can join me again next Monday at 3:30 p.m. Central Time, I'll post the link, and again, it's going to be the same link we use every single month. Join.me/PivotBoss. All right, take a look here at the ES. What you see right now is price has had quite a move here recently off of the recent highs, right? We had the rejection off of these highs. That led to a quick move back to 2703, followed by a push against the opposite pivot low. And so this thing pushed downward. Now we're sitting down here at the lows below this low, and we're sitting right at that lower 25% level. This is where price is traded, in that between those two 25% levels. That is the middle 50% of the overall sell-off that we got to end January and begin February. So that's the middle 50%. So that's exactly what we were looking for back when we basically formed this day and started to bounce. I mentioned the market is likely to stay between these two levels now over the next few months. And overall, the idea is to fade those edges. You can get a little above it, but the idea is to fade it back down. You can get a little bit below this one, but the idea is to fade it back up. But right now the market has been very heavy. It has not really been able to find much footing. You got a lot of lows right here all at the same spot, triggering stops below 2600. Below those 2600s could lead to a big tumble. As a matter of fact, if we take a look out heading into next week and use the weekly chart here, you can kind of see that this is not looking very bullish right now from a weekly chart perspective. We had last week's major sell-off here, which led to a stop run through 2703 with a midpoint here at about 2670. And then this week so far, we came up to that midpoint, rejected hard, and dropped downward. Typically speaking, that's a trigger entry for a shot at new lows. So again, this week is not done yet. This bar is not done yet because we still have one more day left in the week. So this is not set in stone just yet. We'll see how it looks at the end of the week, and then from there, again, if this looks anywhere like it looks now, or even worse, for example, if we close lower today, then we could be looking at expansion to the next downside expansion target. That would be 2354 quarter. So that could be something that plays out over the next 2 weeks or so, if this continues to set up the way it looks. So again, this level right here is going to be very important, 25.29. And so if price does push into that area, I still will be looking for an opportunity to reject. But again, if this thing just starts to push through, if you're short already as this thing goes through, we could be looking at 2354. So that's a little bit of an outlook here for the extended weekend for the ES. If you take a look really briefly at the NQ, you have similar look right now. For the most part, it's given up the midpoint 66.53. Last Friday or 2 Fridays ago was right here, and I mentioned that any break below 7K could open up a move to this level and a shot at retesting the lows. And we got that move very quickly in 1 week, followed by a bounce up toward the midpoint of that range, and then offered so far. So again, if we went to the weekly time frame, it would look very similar to the ES, and that would be quite bearish. And if we saw that extension to the downside over the next couple of weeks, 58.66 could be easily tested around the corner. So again, we'll be keeping an eye on how this thing plays out to end the day here today. But this thing has been very bearish, has not been able to find footing back above 66.53, which opens up the potential for a downside test here into the LVN and at the lower edge of this key range. So we'll keep an eye on the NQ here. Looking at crude oil, you'll notice here crude oil has bounced off of the upper end of the range, 66.29. We had a very, very nice rejection off that level twice in a row, 2 sessions in a row, and then price hit our 63.72 key level. That was our target level. That was our target because it was the midpoint of the previous week's range. After price had rejected the previous week's high 2 days in a row, we got right to that level. Now, this is very similar to the price action we saw before, where price rallies into this 66.29, pulls back to this 63.72, then bounces and fails on a new high, and that's what led to selling pressure. So right now we're seeing the same thing. We got the move up, the bounce here. Now, do we see a rejection here? Are we going to see a higher high rejection? Because any of that could lead to another move back across the range, and certainly back toward value, which would be 62.18 at the very least, and in a shot to go across the range. So that's what I'm looking for right now. How does price play around that 63.75, 72 zone? If we can't hold that level, we start working towards 62.18. Remember, if we reject here, we likely come back here. So any pullback, and right now 65.07 is in play. Any failure to hold above that zone or any failed new high could be an easy selling opportunity for a pushback to here. So again, any pop up similar to this could offer an opportunity to reject and drop this thing. So keeping an eye on CL after it rejected on 66.29 below that level offers more short-term weakness, but eventually we could see major upside expansion on a longer-term basis, and that will lead us to target 70.41 right away, 10 to 15 days, and then over the course of the month we could be looking at a move as high as 74.52, which is the 100% expansion target from this range. So that could be a longer term target here once this thing breaks to the upside, or should it break to the upside. Alright, taking a look here at gold futures now. Gold has already had a major move after our day one rejection day. Here I mentioned that Tuesday that we had a day one rejection day that's developing, and the idea was that every time we've been up here we have a quick reversal back to 1338 and 1330, and so I mentioned that was going to be the target zone right away, followed by maybe a little bit of sideways and then a continuation to 1305 to 1310. It's basically the exact same analysis I gave back here and the exact same analysis back here, because we're in a trading range. And after that major rejection up here, you can see that yesterday was a major extension all the way down and reached both of those targets basically in one day. Now we're back around the center portion of this range and chopping around the FOMC level from September 21st. And we could see a few days sideways. We just had a major explosive move up and down. Now we're back to the middle, you know, something like that and that. I would expect some sideways here over the next 3 to 4 days, followed by the continuation to the opposite edge. So it would not surprise me if we just hug the zone and trade basically between 1324 and 1338 and trade in that zone for a few days before dropping perhaps to the lower edge of the range. Eventually we will see expansion from this range. It's likely due for expansion. So if we see an upside breakout, that would be big because it would also coincide with 1375, which is a significant CLVN in the longer term chart. Above that zone easily would squeeze back toward 1440. Now that would be the first time that has happened in years, but there's always the potential for that to happen. So that's what the upside break would look. If there's any push through 1300, that's when we start to work back within the previous range, 1280, then 1240. Alright, lastly, taking a look at Bitcoin. Right now, again, Bitcoin has been very heavy. I've mentioned this time and again. Ever since the futures came on board, there has been no get up and go out of this futures contract, and instead we've seen this thing just kind of melt through support levels. It had an inability to get back above 9K. 9K is the major separator of major price distributions in this market, and the failure to get above that zone suggested more lows. We have now reached new lows in the current down move, reaching lows of 74.10 today, and we could be due to see a push into 6700 and perhaps even that 58.80. So again, we're just continue dribbling lower until proven otherwise. Right now, it cannot find a bid. It cannot reclaim or reestablish acceptance back above key levels, and that suggests that the market needs to auction lower in order to entice buyers to enter the market. So price needs to continue pushing lower, and that likely occurs below 6,700, offers better opportunities to buy in Bitcoin. So right now, downward trend with the potential to see rejection below 6,700, 6,500. All right, that's it for now. Let's see how this plays out heading into the long weekend. Enjoy the long weekend. We'll be back at it Monday with a monthly market outlook at 3:30 p.m. Central Time. Be sure to join me then. All right, have a fantastic rest of the day, and have a great weekend, and I'll see you soon. Take care.